Good morning and a very warm welcome to you. I'm Rachel for Kalkine TV, reporting to you live from Sydney. You're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday. Starting with the US market, the prospects of speedier interest rate hikes from the Federal Reserve and ongoing supply chain disruptions weighed on Wall Street yesterday, while oil dropped on concerns of oversupply and dwindling demand. The MSCI World Equity Index, which tracks shares in 45 nations, dropped 0.25%. The benchmark US indices closed in the red yesterday after most stock segments declined in a lacklustre session. The S&P 500 declined 0.26%, while the Dow Jones fell 0.58%. The Nasdaq Composite was down 0.33%, and the small cap Russell 2000 fell 1.17%. The market is cooling off as earnings season draws to a close. Mixed signals from the economy because of high inflation, labour market troubles and supply concerns have reduced investors' appetite. Still, the third quarter results of most companies have been above expectations. Consumer discretionary, real estate and healthcare stocks were the top gainers on the S&P 500. Energy, financials and basic materials stocks trailed. 8 of the index's 11 segments stayed in the red. Well, now it's time for a small break, but stay tuned. I'll be back with UK and Australian market updates.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with Kalkine TV.
Welcome back. I'm Rachel and you're watching the Global Markets Roundup show. Now, European stocks closed at a record high yesterday, rising for the 6th straight session. That's as positive earnings reports helped overshadow worries that soaring gas prices were feeding into inflationary pressures. The Pan-European Stock 600 rose 0.2% after better than expected US retail sales data lifted Wall Street equities on Tuesday. The London equities were hammered by fears of inflationary hurdles, with the UK CPI-based rate of inflation soaring to 4.2% in the month of October, exceeding further above the Bank of England's target as corporations increasingly passed on the burden of higher input prices to consumers. This has been the highest rate of inflation in the UK since December 2011. Following the development, the benchmark index, the FTSE 100, sunk deeper into the red, slipping below the psychological level of 7,300 in the wee hours of opening trade on Wednesday. The higher costs of housing and utilities have largely driven the rate of inflation in October, with the price of electricity, gas and liquid fuels witnessing a major surge on the back of mounting energy prices globally. On a month-on-month basis, the inflation rate jumped to 1.1% from 0.3% in September. The FTSE 100 dropped 0.46%, whereas the mid-cap UK average fell 0.36% after briefly touching the positive territory during the day. Japanese shares reversed course to end lower yesterday. That's as concerns over rising costs and a weaker yen outweighed strength in technology heavyweights, tracking overnight Wall Street gains. The Nikkei share average fell 0.4%, while the broader topics lost 0.6%. China stocks closed higher on Wednesday, led by non-ferrous metals and new energy shares. The blue chip CSI 300 index rose 0.1%, while the Shanghai Composite gained 0.4%. South Korean shares fell more than 1% yesterday. That's as investors offloaded stocks following recent gains in the market, with surging COVID-19 cases dampening sentiment further. The Kospi ended down 1.16% after having gained up to 0.25% in early trade. The index hit a 2-week high on Tuesday. So now let's move on to the Australian market. A week started with great promise and has soured steadily in 2 sessions. The S&P ASX 200 has gone from a 2-month high to a 2-week low. In doing so, the index has given up 100 points. The ASX 200 ended 0.7% lower yesterday. Two-year yield for US stood at 0.5%, while Australia it stood at 0.64%. Five-year yield for US stood at 1.24%, while for Australia it stood at 1.4%. 10-year yield for US stood at 1.6%, while for Australia it stood at 1.85%, and for Germany it stood at 0.25%. The dollar eased from a fresh 16-month high, while the euro remained a little soft as investors weighed the odds of central bank tightening, which could slow growth, and that's amid rising price pressures. The dollar index fell 0.15%. Oil prices came under pressure due to oversupply warnings and rising COVID-19 cases. The two major crude benchmarks fell to their lowest closing levels since early October. Brent crude fell $2.15 to settle at $80.28 a barrel. WTI crude settled down $2.40 to $78.36 a barrel. Gold shook off 2 days of losses, rising to its highest finish since June as Treasury yields declined. Inflation worries pushed investors to the safe haven gold. US gold futures settled up 0.9%. Iron ore continued to hover around the $90 a ton level. Inventories at Chinese ports tracked by SMM increased last week despite a decline in shipments. Now we have some more news. We're going to look at some newsmakers now. Sonic Healthcare reported revenue growth of 5% in the first 4 months of the 2022 financial year compared to the same period a year ago to $3.1 billion. Aristocrat Leisure reported revenue growth of 14.4% in the year to September the 30th. The earnings before interest, tax, depreciation and amortization rose 43%. Well, that's all for now, but make sure you keep watching Kalkine TV for more live market updates. I'm Rachel, signing off for now.